Hey everybody, Economic Ninja here. We're going to be talking about the gig economy, but specifically the gig economy when it relates to Uber drivers and Lyft drivers, okay? I think this is a very big deal because recently I've been talking about how important it is to understand the tax system and what's changing in the tax system. And I got a great subscriber question. That question is, should we start an LLC and start putting our money in that because of these new tax law changes as far as people taking Venmo and things like that? Now, at first I go, well, that's sort of weird because you're already getting tax write-offs because you get a 1099 from Uber or Lyft. But then I thought about it. There are a lot of people that when they're driving for Uber or Lyft, they also moonlight on the side and take their own form of payment, like through Venmo, PayPal, Zelle, all those guys, and they become their own taxi service, right? And then I started thinking, yeah, not only gonna get a 1099 from Uber or Lyft, right, their primary employer, which I know that's a whole crazy thing right now with the gig economy, but they're also taking money through these third-party payment apps. So the thing that I thought of was, first off, yes, you should start an LLC or a corporation. Now, this isn't legal advice. You always need to talk to somebody that has legal authority, a tax authority. That's not tax advice, but I have a pretty good idea of this because I do a lot of taxes with my companies, all right? So this is not actual advice, this is just what I do. The reason why you want to do an entity of some sort, a corporation or an LLC, is mainly for the protection, right? What if you were driving and got into an accident and now you were sued, right? It's not like they can go and people would sue the third party like Lyft or Uber, but they can also sue you. So you have the protection because they would have to sue the corporation or the entity, right? So that's number one, that's paramount. But when it comes to taxes, one thing that's really interesting is when you do certain types of tax structures, let's say like an S election, you get to elect to pay yourself a certain percentage of your income, the profits of the company, in payroll, and certain aspects of the payroll taxes become a write-off. The company pays for it and is able to write it off. So things like that work very, very well. So in that aspect of saving money, I think that's a great idea. Now, again, you want to consult a tax professional because that is paramount, but also what I like to do is I like to talk to multiple tax professionals because not all tax professionals know everything. I know it's a big secret. So you just got your money worth right there. But really, between the taxes and the safety, the security, because this day and age, anyone can sue you for literally anything. And if you've ever turned on YouTube and searched crazy Uber experiences, you know that it is super important to protect you, your family, and most importantly, your company, the reason that you're there, the reason you are making money. So I hope you guys got something out of this. I'm gonna put a link below to a company that I use to form my LLCs and corporations. They work in every state in the nation, and it's a coupon code for $100 off the formation, and if you decide to do it, a free 15-minute consultation if this is right for you. All right, without further ado, the Economic Ninja is out.